Owing the IRS is the second greatest fear in the United States. It comes only second to public speaking. Are you in that position right now where you're nervous about dealing with the IRS because when you got your taxes prepared, you found out that you have a balance and you can't pay that balance in full right now? Well, in today's video, I want to share some tips with you to help kind of ease that anxiety and to give you some hope because the IRS does work with taxpayers who are making an effort to take care of their tax obligations. In case you're new to this channel, my name is Timalyn Bowens and I am America's favorite EA. As an enrolled agent, I'm licensed through the Internal Revenue Service to represent taxpayers just like you, no matter where you're at in the world. As a matter of fact, I currently have clients all over the world. I'm also the owner of Bowens Tax Solutions, which is a virtual firm based in Louisville, Kentucky, and we specialize in helping taxpayers who are facing trouble with the IRS. So, back to the point of this video. You owe the IRS and you can't pay in full. So, what should you do? The very first thing that you should do is still file your taxes on time. I see so many taxpayers get so panicked when they see that they're going to owe that they don't file the return. That's a huge mistake. One of the biggest penalties that you could face from the IRS is the failure to file penalty. If you're an individual and you don't have your tax return filed by April 15th, you could face a failure to file penalty up to 25% of whatever that balance is. The way they calculate it is if it's not filed by April 15th, then we go into the next month, that's 5%. And for each month, it's 5% until it maxes out at 25. So let's say, for example, your balance is $10,000. You could face up to a $2,500 penalty just for not filing your return on time or filing a timely extension. Now, if you need more time because you think maybe there are some more deductions that you qualify for or more credits that you qualify for, it is okay to file a tax extension, which is Form 4868 for individuals, to give yourself an additional 6 months to get that information together. If you've never filed a tax extension before, right here on this channel, I have a video about how to do that for this tax year, and I'll make sure to drop that in the comments so you can get to it easily. Okay? Now, if you know that you know that you know you've done all you can to get the liability down and it is what it is, you're just going to owe this year. Like I said, you want to make sure that you do file that return, but then the IRS gives you a few options. So if you have an online account at irs.gov and you have your ID.me account, you'll see that you have the option to set up a short arrangement, which is 180 days. All right. If you can get this taken care of within 180 days, you don't have to set up a formal agreement. That's cool. The reason I say it's cool is the IRS knows that you are going to be making an effort to pay this off within 6 months, but you don't have to pay the whole big setup fee, right? Now, if that's not going to work for you, there are still options beyond that. Prior to this tax year, if you have been a compliant taxpayer, which means you get your returns filed on time and you haven't owed in the past, or when you owe, you pay it in full when you file, you may qualify for what we call a guaranteed payment plan. In this payment plan, you have 36 months to pay the debt off in full. Okay? But maybe you're still watching and you're like, hey, that really doesn't fit my situation. What other options are there? Well, there's something we call a streamlined agreement, and that's 72 months. And if you can pay it off within 72 months, the IRS will allow you to do that, no questions asked. Now, during the time of this arrangement, the 72 months, you have to make sure that you stay in tax compliance. That means that you get all of your returns filed on time. If you're a wage earner, your withholding is accurate so that you don't owe at the end of the next tax year, and you don't add on to the balance. Otherwise, the streamlined agreement that you set up will default as soon as you owe again. Okay. And with that streamlined agreement, the beautiful part about that is that you don't have to turn in your financial information to the IRS. So remember, with each of these arrangements, this is going to be a privilege, okay? Not a right. With that being said, with that being said, you want to make sure that you're doing your part to make sure you don't end up in this position again. Now, if you have a debt over $10,000 and you don't select to have your payments direct debit, the IRS may issue a tax lien, which is essentially them calling dibs to any income that you have, any sale of property where you would get cash. The IRS is going to file this lien with your county clerk so that, let's say you were selling your home. When that title is pulled, that lien is going to pop up as well so that the IRS gets their money before you get any money from the sale. Okay? So you might be like, okay, that's all fine and dandy. I can't pay it off within 36 months. Can't pay it off within 72. There are more options. I'm not going to cover them all in detail in this video, but one of them is called currently not collectible. With currently not collectible, that means that any payments you make to the IRS right now will put you into a financial hardship. When you fill out the paperwork to qualify for currently not collectible, the IRS typically gives you about a year to get back on your feet and then they reevaluate your tax situation. Now, I have talked about this in more detail on my podcast, Tax Relief with Timalyn Bowens, and I will actually link that episode down in the comments. Another option that you have is the offer and compromise, which is what everybody talks about on the radio and TV. It's where you offer the IRS a lump sum to take care of your tax debt. Here's the thing, as good as it sounds, a lot of people do actually qualify for it, but it's not for everyone. It's not for the majority and the masses. When you apply for an offer and compromise and you request that, the IRS is going to take into consideration your ability to pay, which is going to consider things like your income. It's also going to consider your age and your education. They're going to take a look at your assets and how much equity you have in them. Do you have a home that's paid off where you could get a HELOC and pay them? They're going to be looking at that type of stuff. They're also going to look at your expenses. If you are a good fit, best wishes to you, but the majority of people that I work with, honestly, are not. But it is something that you would want to explore to see if you do qualify for. I hope that you found this video helpful. I never want to judge anybody's tax competency and say, oh my goodness, yes, you can absolutely do that yourself. If you're on the fence and you're like, hey, I really don't know if I can do this myself or if I need to work with a professional, I would like to invite you to book a call with me at bowenstaxsolutions.com. During our call, we'll see what you actually qualify for based on a series of questions that are asked, and we'll see if you're even a good fit to work with us at Bowens Tax Solutions. All right. But what I tell everybody is even if it's not me, make sure that you get the help that you need. All right.